A few options for your YouTube intro, ranging slightly in tone. Choose the one that best fits your style. Option 1, friendly and direct. Hey everyone, welcome back to Forex Scope, your go-to source for insightful Forex analysis. Today, we're diving deep into EURJPY on the 15-minute and 1-minute charts to uncover potential trading opportunities. If you're looking for clear signals and future price direction, you've come to the right place. Don't forget to hit that subscribe button and the notification bell so you don't miss out on our daily insights. Let's get started. Option 2, enthusiastic and engaging. What's up, traders, and welcome back to Forex Scope. We're excited to bring you another fresh analysis today, focusing on the ever-moving EURJPY pair across both the 15-minute and 1-minute timeframes. We're here to provide you with actionable buy-sell signals and a glimpse into where EURJPY might be heading next. If you're serious about your Forex journey, make sure you're subscribed. Smash that like button and let's jump into the charts. Option 3, slightly more formal but still approachable. Hello and welcome to Forex Scope, where we provide in-depth Forex analysis to help you navigate the markets. In today's video, we'll be performing a detailed technical analysis of EURJPY using the 15-minute and 1-minute timeframes. Our goal is to identify key trading signals and project future price movements. For consistent and reliable Forex insights, please consider subscribing to our channel. Let's begin our analysis. Option 4, short and sweet. Welcome to Forex Scope. Today, we're breaking down EURJPY on the 15-minute and 1-minute charts. Get ready for clear signals and a look at future price trends. If you're new here, hit that subscribe button. Let's dive in. The resistance zone is identified between November 7, 2025, 14 hours and 30 minutes and November 7, 2025, 14 hours and 45 minutes. During this period, the price struggled to break above the level around 177.553, with multiple attempts being rejected. The candles in this timeframe show significant upper wicks, indicating selling pressure from the higher prices, and a clear consolidation pattern before a sharp move downwards. This resistance area represents a ceiling where sellers were actively defending the price. The presence of these two distinct 15-minute candles with considerable trading volume and price action failing to sustain higher levels strongly suggests this is a significant resistance zone. The low price of 177.32 and the high price of 177.553 within this zone highlight the intense battle between buyers and sellers, with sellers ultimately prevailing, forming a clear resistance. The support zone is identified between November 7, 2025, 12 hours and 45 minutes and November 7, 2025, 13 hours. In this interval, the price tested the lower bound around 176.863 multiple times, showing a clear inability for the price to continue its downward movement. The candles in this period demonstrate strong lower wicks, signaling that buyers stepped in and pushed the price back up from the lows. This area acted as a floor where demand was strong enough to absorb selling pressure. The two 15-minute candles within this zone show considerable price rejection from below, indicating that the level acted as a significant support. The lowest price reached was 176.863, and the highest price within this zone reached 177.046, with the price consolidating and bouncing off this lower boundary, confirming its role as a support. The support zone is identified by a period of consolidation and indecision in the price action. Observe the candles from 176.254, 3440 to 176.254, 3500, where the price struggles to break decisively lower. The upper boundary of this support zone is set at 177.360, marked by the high of the candle at 176.254, 3440 and reinforced by the subsequent candle at 176.254, 3500, which opened slightly higher but closed lower, indicating selling pressure being met. The lower boundary at 177.342 is defined by the low of the candle at 176.254, 3440 and further tested by the low of the candle at 176.254, 3500. This area shows multiple attempts by the price to move lower, but sellers are unable to sustain the downward momentum, creating a floor where buying interest emerges. The presence of multiple candles within this narrow range, with relatively small bodies and overlapping wicks, suggests a period of accumulation or distribution before a potential move. The price has touched this level multiple times, demonstrating its significance as a point of buying interest. This zone is crucial as it represents a price level where buyers have historically stepped in to prevent further declines. The range between 177.360 and 177.342, spanning from 176.254.3440 to 176.254.3500, highlights a period of equilibrium where supply and demand were relatively balanced, leading to price stagnation. The upper limit is defined by the highest price reached during this phase, and the lower limit by the lowest price, indicating a trading range. This area shows clear evidence of price stalling and consolidating, which is a hallmark of a significant support level. The high price within this range is 177.357 and the low is 177.331. The resistance zone is identified by a cluster of price action where the bulls struggled to push the price significantly higher. Examine the candles from 176.254.7400 to 176.254.7520. The upper boundary of this resistance zone is established at 177.435, representing a price level where selling pressure consistently emerged, capping further upward movement. The lower boundary at 177.407 is defined by the lows reached during this period, indicating that any attempt to push prices lower within this range was met with buying. Specifically, the candle at 176.254.7400 shows a strong upward push, but the subsequent candles demonstrate an inability to sustain this momentum, with prices retreating from higher levels. The highs of the candles within this timeframe, peaking at 177.468, are met with immediate selling pressure, pushing the price back down. The area between 177.435 and 177.407, from timestamp 176.254.7400 to 176.254.7520, exhibits characteristics of a selling pressure zone. Multiple candles show long upper wicks, indicating that buyers attempted to drive the price up, but sellers overwhelmed them. This repeated rejection of higher prices suggests a significant resistance level. The price action within this zone shows a struggle between buyers and sellers, with sellers ultimately prevailing in preventing a sustained breakout to the upside. This indicates that a considerable amount of selling limit orders are likely placed in this vicinity, making it a formidable resistance. The highest price recorded within this timeframe is 177.468 and the lowest is 177.433. The EURJPY is currently exhibiting a complex price action pattern, suggesting a potential for both upward and downward movements in the short term. The Fibonacci retracement levels, with the 0.618 level at approximately 177.304 and the 1.618 level at 177.465, indicate key areas of potential price reaction. The recent price action has been consolidating around the 177.40 to 177.50 range, showing a struggle between buyers and sellers. The tick volume data suggests moderate trading activity, without a clear dominance of either bulls or bears. The Bollinger Bands on the 1-minute timeframe are relatively tight, indicating low volatility, but the price is currently hovering near the upper band, hinting at potential upward momentum. However, the presence of resistance at 177.553 on the 15-minute chart and the earlier rejection from this level warrant caution. We anticipate a test of the immediate resistance around 177.450, followed by a possible retracement. If the bulls can overcome the 177.550 level, we could see further upside towards 177.550, but failure to do so might lead to a decline back towards the 177.400 to 177.350 support zone. The interplay between these levels, combined with the observed price action, suggests a potential zigzag movement as the market digests recent information and navigates the established support and resistance zones. Traders should closely monitor the price action around 177.500, as a break above or below this level will likely dictate the immediate direction.